restoring balance, what's it going to take to turn the industry around, how does financing look at it, and these are questions that are fairly difficult. I think everybody that has an opinion probably has a different view. When I was looking to frame some of the questions to ask people, I look back to other times in history to find something that was analogous, and it's very difficult. The oil service industry went under its downturn. You had such a wide gap between replacement costs and current asset values that investors would look at, their return on equity as being pegging it against that. But the shipyard cost has come down just as much in many respects as new build cost. As cost of existing assets are. So, it's hard to see what you peg it on. So what I thought I would do is start and ask each of the panelists on the operating side, what their view is of their particular industry segment. And what I would like to ask them to focus on is sort of near-term, longer-term. With respect to the near-term, obviously you're really looking at more supply-demand. Where do you think the order book's going to come in line? And on the demand side, which is now perhaps more difficult, what do you think the issues are on a short-term basis that could create either a dramatic negative or positive surprise? And then on a longer-term basis, I'd ask each of them to talk about where they think it can go. Is this industry going to go back to where it went before, or have the constraints on say, there you are. Okay, Harry, we're going to let you take one of the more difficult industries. Can you talk to us about crude?
Actually, let me talk to you about the industries the sectors rather that we're involved in. We are, as most of you know, both in crude and products, and also in energy, which is probably the hottest sector today. In terms of the balancing act that you mentioned, Jhon, I think that we still have some way to go. Probably not that long as some of the more pessimistic analysts of the sector might expect. I mean, we are overall relatively confident that the market will turn. As you know, this is a supply-driven weakness. I don't like to use the word recession. If it was primarily a demand-driven kind of event, then we should have been in one of the hottest tanker markets around. The demand is there. We're seeing China still has a lot of thirst for crude oil. The same with India. And as long as these countries, particularly India and to an extent obviously China, the more they get urbanized, the more demand for crude oil, for the internal consumptions. So we do expect that over the next 6 to perhaps 9 months, if you want to stretch it a little longer, probably a year, this market will face certain challenges. But with almost 80% of the order book being delivered within by probably this time next year, then and assuming of course that demand remains, and we're pretty comfortable and confident that the market will start to see some kind of positive rebalancing, if I can say it that way. But overall, both in in the longer term kind of outlook, we are relatively bullish on product tankers, of course, and the crude sector, and very optimistic in the energy, which is a sector that we're involved and planning to participate in further. The new build we just ordered. So we are, I would say, one of the probably more optimistic companies that we believe that the end is nearer than what people expect.
Jerry, since you're somewhat in the same segments, when we look at Clarkson's going forward, you start to see things looking like supply-demand, and the product side equalizes, say, late 13. the crude side, obviously it looks a bit longer, 14, 15 type thing. What is your view on those two sectors? And also, do you know, back a few years ago, pre-crisis, we used to have a nice arbitrage trade between America and Europe, but now you're starting to see some excess petrol capacity in the United States. Could you see a similar trade of petrol for diesel with petrol for petrol between Middle East, Asia, and the United States?
Thank you, Jhon. That's actually a very good question because the U.S. just turned to one of the largest oil product exporters as of the last couple of years. This is, I would say, more of a later development, which has to do with two issues that have been supporting ton-mile demand growth for product tankers, and we believe it will continue to positively affect demand for product tankers going forward. So firstly, we have refinery capacity dislocation. We have, since 2008, the OECD and especially US and Europe have lost about 4 million barrels of refining capacity, while at the same time, a lot of new refinery capacity has been added east of Suez, and another 7 million barrels of refinery capacity will be added over the next 5 years. So effectively, at the same time that Europe will continue to have a structural deficit in middle distillates like diesel or gas oil, the US is turning to an oil product exporter while losing some refinery capacity. And you also have new players, emerging economies like certain countries in South America, Brazil and Chile being a good example, as well as other countries in the Asia-Pacific region having to import more. What you see is that a lot of new trading patterns emerge. And secondly, the average voyage duration is increasing over the last few years. And if anything, this is going to become more acute going forward because of the refinery capacity dislocation. So when it comes to demand, especially medium to long-term fundamentals for the product tanker industry, I think we are seeing a very good picture going forward. And it has been backed up by the fact that you have seen also a number of key players in the industry, oil majors, BP, Shell, traders, Trafigura, Vitol, etc., taking increasingly more vessels on period charters longer than 6 months. So in full year 2011, you had 85 period fixtures longer than 6 months. In year-to-date 2012, you had 150. So there is a lot of movement, a lot of activity around the product tanker market, and that's because of the emerging new patterns. Looking at the supply side, which has been an issue, an overhang, if you want, over the last couple of years, this has been partly addressed. If you look at the order book back in 2009, it was 55% of the then existing fleet. Today, it's close to 10%. The reason behind this is not that all the ships have been delivered. If you look at Clarkson, for example, consistently they have been recording a slippage, that is cancellation, postponements and all that, of more than 50%. So 1 out of the 2 ships have not been delivered. So we're at the point now where demand is even this year product tanker demand is expected to exceed supply. And in reality, the order book might be even smaller than it looks. I mean, I just checked the Clarkson's intelligence before I came here. There were 26 newbuilding deliveries for product tankers year-to-date 2012, and another 60 expected until the end of the year. This is not going to happen. So overall, the demand and supply dynamics are quite good. The issue I think that we have been facing, and the spot market has been suffering over the last few months, and especially in the second half of 2012, is weakness in Europe and the US. If we see there a rebound, I think we will see stronger spot markets as well as the period markets.
Thank you, Jerry. One sector in shipping that I don't think necessarily always gets quite the public attention is the container sector. It happens to be one of the ones I find most interesting. Michael, could you address the same sort of issues, supply, demand, health, and what are the salient risk upside, downside, and also this is an area where you're starting to see more and more new orders placed or people looking at those.
Containers, supply and demand. I think that supply-wise, containers are in the same situation as the dry bulk sector. The order book is around 20%. The market right now, and fortunately, not very many orders are being placed. Of course, I am personally concerned about these new marketing efforts by shipyards concerning eco ships that Jhon pushed us. I thought he gave an excellent presentation and an excellent insight, a different perspective into what is being marketed to us. Anyway, close the parenthesis. The order book, for as long as it does not increase significantly, which means that not many of us fall into the trap of ordering ships which we think will put us into a different tier straight away. I think that the market is very bad right now. Charter rates are low, but I expect a rebalancing of the market. Probably will be the container ship sector will be the first to actually return to recover to positive territory out of all the segments. And the reason is that the order book is at historical lows. Very few times in the past the order book was as low as 20%, and the demand side seems to have taken a hit primarily because of Eurozone problems and the US problems. And I think it will only take a psychological, tick, especially in the Eurozone and the developed economies in the US, so that the consumers, all of us who have until now pushed the pause button, who all put our plans for renewing our cars and refurbishing our apartments or changing the window frames in our homes. It will only take a little bit of psychological, change, fundamental change, for all of us to be convinced to spend more, and then we may see a step change in demand, and this will create, a very nice rate environment. I can go on for the dry bulk if you want, but maybe you want somebody else to talk about that, Jhon.
Well, now, Michael, I'm throwing out to both you and George on the dry bulk side. I mean, this has been a real tough industry, I think, particularly with the downturns in India and in China. I mean, you still have a good-sized order book. You've got a lot of uncertainty on demand. So why don't one of you address, sort of capes and more what you see in the steel side, and the other address the coal side. So, Michael, you still have the microphone. Why don't you pick one and pass the other over to George, or maybe see if we can get some disagreement between the two of you.
Well, as I said in the beginning, the supply side is similar. Dry bulk order book is 20%, 22%, skewed towards the larger sizes. We have many more capes on order, Marinakis on order, than smaller vessels. In fact, the handysize sector is under ordered. In 2012, we are having a negative growth in the absolute number of the handysize that are trading in the seas. The problem with the dry bulk is the demand side, which has been slowing down a little bit, but it is still healthy. So I think medium to long term, short term, I am pessimistic. I think we are going to be operating in a very weak rate environment in the next quarters at least, and definitely throughout 2013, which may be even worse than 2012. But we also have a lot of scrapping. The order book will be delivered. It is peaked. It is peaking this year and 13. And beyond that, there are very few ships to be ordered, unless, I repeat, we fall into the trap of ordering eco ships there and destroy our industry once and for all. So demand, which will continue, in my view, to be there. China may be slowing down, but it is going to. Demand, I believe, will be healthy in the dry bulk sector coming from China. China has to build the majority of its country yet. It has done a lot of infrastructure work. building homes for its citizens, but they are not over yet. They have many, many more years to go. And we also have new players in the market, new drivers like India and other developing nations. And another element I would add is that China is investing a lot of money, a great deal of money in Africa, in mines in Africa. Now, once these investments take hold and the mines start producing minerals and the ports improved so that capes primarily go there and load, I think that this will add a ton-mile dimension in the business which many of us underestimate. So overall, I'm very positive on the demand side of dry bulk going forward, but it's going to take some time before the new deliveries, in combination with the increased scrapping, are absorbed. But long term, I'm very optimistic. We're going to see a very positive market. I worry the downside is that there is still very big shipyard capacity, and the question is, how long will a good market last when shipyards can actually deliver very many ships in a very short period of time and really change again the supply and demand balance against the ship owners. I also think it's a very good thing for the industry, the fact that there is very scarce bank liquidity. This will help the order book to remain thin, not to grow too much. It will help also asset values to remain at reasonable levels. Overall, we need to be patient. Companies need to be liquid, patient, and careful. And I believe we have a bright future ahead of us.
I'm sorry to disappoint you, Jhon, but you're not going to see this agreement in 5 years. I agree with all the comments. The big difference, one thing I want to point out, the big difference between dry and containers is that the dry fleet, the global fleet, is overaged. And that's why you see this huge amount of scrapping. This year, the estimates are that we're going to reach about 34, 35 million deadweight tons of scrapping, which is a record year. And that's about 5.5% of the global fleet. And that should help bring the balance in the industry faster than maybe the container side. In terms of demand, I think the urbanization that's going on in China is going to continue. India should follow. The steel demand will keep at a good pace. And as long as iron ore prices are below $120 per ton, I think we'll see the Chinese importing more and more, because the imported iron ore is much better quality than their own. And the Indians will keep importing coal. We see now India importing more coal than Italy, Germany, France and Britain combined. And most of the new power plants that are under construction are all coal-fired, or at least I think about 2/3 of them are coal-fired. So I think we will see more imports of coal into India that should keep the Cape-size sector busy and the Marinakis busy.
Do you have any concern that if you continue to see shale gas and other types of gas improve, that you could have a response, certainly not in the next year or two, but say in 3 to 4 years out, that could put a damper on thermal coal activity and move people more and more towards gas?
In terms of India, which is the country that we have monitored more closely, as I said, 2/3 of the new plants, the mega plants that are under development right now are all coal-fired. So I don't think we'll see a substantial shift anytime soon. Eventually, we may do, but not anytime soon.
All right, Paul, I'll give you a different one. When you look at, I think if you went back, say a decade ago, and you looked at the industries, the shipping industry, you clearly would have thought that the crude would recover, crude oil transport, because that's demand, except for extreme periods, is relatively inelastic. I don't think anybody would have thought that the dry bulk side would have gone to where it went, okay? Or that you would have had quite the changes in products because of, the differences in production and consumption. And certainly most of us didn't think about So when you look going forward, if you have Chinese consumption, let's say, that starts to increase, because at some point in time, like any maturing economy, they're going to have to produce their own demand. And so instead of putting all the things they make in little containers and shipping them to Long Beach and places like that, they're actually going to put them on trains instead of to other parts of their own country. Demographically, they're going to be using more cars. Americans at some point are going to quit buying cars like we have. So you can start to see products come down. So posit for me, if you will, a paradigm in which you still have tremendous growth in global trade, but the changes now are such that you don't have the long haul and you don't have the ton mile increases that you've had, particularly to sustain a fleet which, say, a decade from now, is going to be a pretty big fleet. It's going to be very modern. You know, you're going to have container vessels, maybe 20,000 TEU. People are talking about things that are huge. So how do you look out? Because clearly the world, what we've seen from the last decade is the world is not constant, and what happened is not going to be what's going to happen.
Thank you, Jhon. I suppose the question really is the kind of maturation of the Chinese economies and the Indian economies. Is it going to have kind of a negative effect on, particularly in our sector, product tankers and chemical tankers? And I guess theoretically it could. I mean, the IEA report came out last week, the market oil report, to say that the oil industry is going to undergo some fundamental changes in the next couple of years. You're going to see continued shift in refineries, whether for a variety of reasons, from east to west. And that's obviously going to have a particularly significant effect on product tankers. With that said, there's the Chinese country is quite big. There's a very interesting statistic which I heard about 3 weeks ago, which said that if the GDP per capita in China was to increase to the same level as the GDP per capita in Thailand, that would equate to an additional $30 billion barrel of oil a day, which is the equivalent of OPEC doubling their output. So I think the point to take away is that yes, the Chinese economy may well slow down, it may well transform from being an export economy to internal consumption, but it's a pretty big country, and it still has a long way to go, I think, before it has a negative effect. I mean, the effect of more internal consumption might have a more negative effect on crude tankers than it might have on product tankers, but I think we'd still be quite positive about the long-term prospects of China.
What about the impact of alternative technology? I mean, clearly battery-powered cars are not working very well right now, but hybrid cars do work. They work quite well. And one would have to assume at some point in time that both battery cost, fire issues, and also its storage capacity would get to the point that it should be something that could be competitive. And then you have a whole new arena, because then what you're doing is you're pricing petrol against electricity, which is either coal, natural gas, or geothermal, hydro, whatever. So what does that do? Is that a real thought, or is it a...
I mean, I guess at this stage it's still theoretical. I mean, the Chinese economy, in particular, those emerging economies, are still quite underdeveloped, and to think that they'll be entirely reliant on battery and solar and hybrid technologies, I think at this point is probably a long way off. I think they'll still be reliant on product and petrol and all those distillates for the foreseeable future. So I think in the immediate future I wouldn't have any concerns. It still has a long way to go, and I think their reliance on products and distillates would remain.
Isabella, this question's for you. Working at NASDAQ, you know more about which deals are happening, which deals are trying to happen than any of the rest of us do, because you get to see everything. So take us through a little bit the financing activity that you see on the horizon. Obviously, you can't mention names, but it's been kind of a slow year. And so what do you see going forward?
Thank you, Jhon. We've seen a number of IPOs happening this year, so the activity was good with 119 deals. We've seen companies across all sizes raising capital in the region of 10 million up to obviously the staggering 60 billion we all know about. which filed confidentially with the SEC. I'm in dialogue with a dozen of European companies, smaller size technology space. So I think, if all these companies will price markets permitting, so obviously we will have a good year going forward. In terms, with regard to shipping, it's still, I guess, a wait-and-see attitude. Shipping IPOs seem to be challenging, simply based on the past performance of some of these companies. But it's encouraging to see that a number of secondary listing for the existing shipping companies took off, and it's for especially some of the panel members, it's very easy to raise capital since there was a brand behind. So I guess, to summarize, we've seen lots of activities across all sizes, across all sectors, and if this growth story is there for investors, the money is there for the companies. Thank you.
David, this sort of segues well into the next question for you. You're probably the only person on the panel that's older than I am, so I've been in the industry as long as I have. What's the catalyst? That's one of the three topics Kevin addressed. What's going to make people wake up on the buy side and say, "Oh God, I really need to be in shipping again" in the near term?
I think it's somewhat the same as financing. It's increased day rates, across the board other than in the gas side. But the only catalyst that I actually see out there that could change the dynamic in, say, the next 12 months is the U.S. election. And this may sound strange to say, but if we continue in the U.S. with the current president in that regime, I see a recession within 6 months of the election, and not because of anything they do, but what they don't do from the tax side. My view is the taxes hit, and what could potentially affect certain of the sectors, and particularly containers possibly, would be a program of getting people back to work that hopefully would come out of Mitt Romney. I'm not trying to be political. I'm trying to say that, I think there are some choices out there, and we'll see what happens. But that's the one catalyst that I see, probably with a lag of 1 year with the election, to try to get the policies in, to try to get, the U.S. unemployment down so that people can buy things again. But other than that, we need day rates.
George, feel free.
David is American, so he's talking about the U.S. elections. I mean, we have to address the European Union. That's another major catalyst. Unless the Eurozone, the Europeans reach a solution within the Eurozone, that will still be an overhang, overwhelm trade. And the sooner we find stability, the better it will be for all sectors of the market.
It's as long as we continue to not have any deals in the shipping industry, I become more and more one of the people that Obama's now talking to. So I've, as my net worth and income decline each year. So I'm not sure what the impact of politics is, but one of the things that we're seeing is we've seen a really big increase in the incoming calls to both our equity desk and our private placement desk. I think what we're starting to see is that people are believing that the market's truly bottomed out. Regardless of what upside scenario you look at, the returns are pretty good in shipping. I mean, it's going to be anywhere between, most people believe, between great and more than acceptable if you can survive. So if you can buy into a company that's properly structured, it's got the right contract mix, it doesn't have the debt issues, that's something that makes sense. And we're seeing a surprising increase. Also the road shows when we've taken people out are full. And you can see the increase in the private equity that's been put into the industry. I think all of you, everybody reads trade wins, obviously. And, they report pretty well what's happening. So, I think that there's a agreement or a consensus, if you will, that we've hit bottom. What hasn't developed yet is a consensus of when we turn around. And, that's what we're talking about here. But you're starting, if I can synthesize, it seems like people are thinking an 18 to 24 ask for some questions from the audience.
Any questions?
Yes. Hi, Phil Batista from Atlas Maritime. I'd like to ask Mr. Bodouroglou, which in his opinion is a good shipyard in China for building a handy-sized bunker.
He's going to charge you for this. Michael, standard new build commission's about a point, so.
Well, last time I looked at my CV, I did not see that I represent Chinese shipyards. But we are building, it's no secret, I can only tell you what is public information here, because I don't think that it would be fair on any shipyard for me to say, to market for or against. But we are building in a shipyard called Wuhu shipyard. We're building 4 handysizes there. 2 of them have been delivered, and we are very happy with the quality.
Another question?
As we know, protectionism is a great threat to the world trade. Do we think it is a greater risk now than it has been? What's your outlook for the next 2 years?
Yeah, I think that's something that's going to be a really tough one to call. You're seeing increased bellicosity from different countries, particularly David's friend, Mr. Romney, about other countries, and in Europe, obviously, it's an issue, but you have a structural position in place with European Union that's going to make it a little harder. But I think you're going to hear more talk than you're going to see action. But I think it's something that is an issue. Again, I think it's going to be more smoke than fire. But there's a tendency if you look at any bad time throughout history, there always is a tendency to try to offload your problems onto someone else. And protectionism is an economic form of doing that. It hasn't happened as much this time, just because. It's just the world is so screwed up. You still, the economics of working in a more globalized economy are still so compelling. People haven't gotten there thoroughly. Michael, absolutely.
If I can also add something to that, I think that it is fair to say that never in the past we have been living in a society which is so. Has such a degree of freedom of trade. Never trade was freer. I think this is a very positive development. It is also, I think, and our industry is the major beneficiary of this globalization that we have been witnessing lately. And I think it is to our advantage to not only preserve it, but to enhance it further if we can. And if I can just say a slightly political thought that comes into my mind, and it's very important, I think, that globally to make sure that we do not offer good enough reason for countries to adopt, or regions to adopt protectionism. So maybe we should rethink a little bit our free market model.
Yes. Let's get a tough question.
I'd like to, Jhon from Intermodal. I'd like to say that I agree with David with your comment about your catalyst being the US elections, but I would like to hear what the panel has to say about the forthcoming elections of China. Any impact in our markets? Because 2012 has been a year with the biggest slowdown. We've moved down below 8% as growth of China. Could be attributed to the elections last year. They don't do much, so that they don't get credited or debited with mistakes. So what do you think could happen after the elections?
Well, it remains to be seen up to what extent the expectations for a new stimulus package will materialize in China after the new government is in place. But I think the overall expectation both in China, I think, and outside, is that the new government will have to start with a strong stimulus package so that in order to start on the right foot. Having said that, on the oil side, of course, which tends to be a bit more inelastic, the impact is expected to be more limited. But if indeed infrastructure programs, extensive infrastructure programs start as expected, I think both the tanker as well as the dry bulk industry will benefit from that. But of course, it remains to be seen. It's only a plan and hearsay at this point.
Yeah, I agree. I mean, the expectation is that the new stimulus will start to kick in right about the time when the new government will come in. And we believe that the Chinese need to keep the growth. They need to keep the people happy. It's a billion-plus country. So we don't expect any radical changes in what they have been doing over the past few years. 2012, because of the period before the elections, everything seemed to have slowed down, but hopefully that will reverse in 2013.
Yeah, it's ironic that we're looking at the Chinese elections, which is purportedly not a democratic country, with a greater impact on the world than we look at our elections in Europe and the United States. It's just, my wife is Saudi Arabian. She was watching the American election stuff with me, and she said, okay, let me get this straight. You spend $1 billion, so two guys get up and lie about everything, and you call that democracy. She said, we have a king, and we do pretty well. And so the politics of the world have truly changed.
One more question. Let me just wrap it up. I mean, I think, from what we've heard today, I mean, I think there's a reasonable degree of optimism that if we can get through 2013, things are going to look a little bit better. So, we'll be having this same event here next October. Can I ask the panel, what are we going to talk about, next year? What are my sort of topics? Is it going to be that much more positive? I mean, where are we going to be on eco ships? Where are we going to be on the kind of growth story? Where are we going to be on, shipping demand?
I'm hoping to be hanging out with Jerry on his new yacht. I suspect next year we're still going to be going through some tough times. They'll be a little less tough. The markets will be turning a bit, but it's going to have its whole set of challenges because, structured intelligence growth is also something that we really haven't faced in the shipping industry or done very well from both our side, the financing side, and the ship owner side over the last decade. So as we pull out of this, I think those will be the kind of things we'll be dealing with. Jhon, take it away.
I think in terms of the dry bulk, we'll probably be at a stage where we see light in front of us. And I hope that everybody on the dry side will be very positive this time next year.
I tend to agree with George. I think we'd be a little bit more positive. I think the real challenge over the next 12 months would be kind of the solution to the Eurozone crisis. I think we would have expected this time last year that would have resolved itself by now. It hasn't. I think if the next 12 months does anything, and if that's the solution to that, then I think we've definitely seen the light at the end of the tunnel.
I think that the key words today in every ship owner's mind are indebtedness, debt, and liquidity. And I think a lot will, a great deal of fates will be judged over the next quarters. A lot will depend on how banks treat over-indebted companies, over-indebted assets, and a lot will depend on the shipping companies' ability to remain liquid during what is expected to be a low market environment, and see, who makes it, who survives, and who also is able to capitalize on opportunities that lie ahead. So this, I think, next year, I think we will be talking about this.
Well, in order to probably take a guess on where the markets and or what the
year, I guess we need to take a position today on whether this current situation, this current market resembles the market back in 1982 or the market back in 1984. If you believe that we are in 1982, probably we're going to see owners taking a more defensive approach, some invasive actions in the way they operate, and kind of take cover because we still have a long way to go. If we're in 1984, which is the camp that personally and our company work with very strong believes in, then I believe that this time next year we will be in a position to have kind of the back all these challenges time behind us. A lot will depend, as Michael said, on the banking market, and I mean, so far we haven't really seen the banks applying real pressure on owners, which in a way is good and bad. But if this weak market continues for the next 6 to 9 months, then probably we will begin to see some cracks on the foundation, and then in a way that will determine a lot on the way the banks go after kind of securing their loan group will determine a lot on the market, on the survivability of companies, and also it will play very significantly in the development of the new build order book, of the current order book, which is basically what suffocates the market today in primarily crude, but also in products. So, the question that you have to ask yourself is, are we 92 or 84? And depending on that, then you probably move accordingly.
I'm going to address this more towards the U.S. and Europe, where I have a little more thought about it. The biggest challenge, I think, right now is how governments put policies together that allow their citizens to be as competitive and productive as possible. Shipping is a GDP business, meaning gross national product, the world needs to increase, and if the governments of the U.S. and elsewhere try to address that, then I think our outlook will be much better than it is today. Obviously, at least in the U.S., we're flooding the market with money. Our Fed has brought interest rates down to close to zero. You can refinance a home 15 to 30 years between 3 and 4%, which I've never seen in my lifetime, and it's there right now going on. So, interest rates, at least for the U.S. consumer, are quite low. I'm not talking about credit cards, but I'm talking about the capital goods world. The high yield market, as we talked about earlier today, is as hot as it's been. B-rated companies are being treated like investment grade. So the money side has been solved, but we have to get people back to work so that they get off the government dope and actually pay taxes.
Very briefly, my viewpoint is if we don't see any dramatic macroeconomic changes, I think we'll sit here again and have the same topics.
You're the German, you're supposed to be optimistic. Thank